Alphabet, ABC. It's as easy as 1, 2, 3, ABC, and 1, 2, 3. Google is the place to be. Yes, Google, the search engine, the YouTube extraordinaire. It has been an absolute conglomerate for a long time. The top search engine for a long time. Will it continue? Google has been absolutely flying. AI, it's all happening for Google at the moment. But the share price has been a little bit battened down. Well, it has gone up recently, but will we see some big movements? So first of all, let's get it straight out the back door. I used to own Google. I got out. Why? Because I saw a better move in Meta, and well, the fruit is in the pudding. Meta absolutely exploded, where Google hasn't. But it doesn't mean that Google's not a bad investment. I just chose to go in a different route, and that's why I went that way. So that's just giving you full disclosure. Used to own Google, no, not anymore. But doesn't mean it's not a stock I'm not watching, and maybe we'll reinvest again. But definitely was a good buying opportunity when I bought it. So let's have a look at, we're going to take a deep dive into the stock analysis. Well, we're going to look at the key metrics. And if you stay around to the end of the video, I will give you the intrinsic value, well, possible intrinsic value of Google, and where a possible buying rate for you if you want to be in the margin of safety team like myself and a lot of others out there. If you want the high-flying stocks, this is not for you. This is about a stock that's long-term potential, and we want to get in at a good bargain rate. Let's check out Google's key metrics, starting off with the revenue. Yes, in 2022, we're looking at 282 billion. It's expecting to be about over 300 in 2023, up from 182 billion. Okay, so 182 billion dollars in 2020. So they really have started to really grow their revenue. So that is positive for the company right there. They really went well in the meta space. As you can see, the camera's all flying around. My fault. But get back to net profit, 59 billion. So they've got a good metrics here. You're looking at a 20% from the top line to the bottom line. They are doing something right. Google is absolutely a good growing machine. So it's a stock they really need to do some research on, and maybe it's a stock for you, not financial advice. But the thing is, it was 76 billion last year, so that's a big drop, and that's why you saw a little bit of a decline in the stock price. And now it's slowly climbed back up again. But it's going to be interesting to see what the future holds here. If they can get that, start getting that back consistent again, then it'd be nice and impressive for the shareholders out there. Earnings per share, 5.6. That's probably a bit low for the stock, but it's not bad. And the PE ratio, 24.6. Is this like too low for the company? Should this be a 50 or should it be a 12? There's a lot of people argue either way with this company. I still think there's quite a lot of growth in this company going forward. No dividend. I think that's probably on Google's list soon. Don't get me wrong. I don't think they've talked about it, but I expect Google might be a company that will be looking at a dividend in the next couple of years. I just think at some point they're going to decide that growth isn't the answer, but at the moment, clearly growth is the way to go. Ideally, they want them to bring a dividend for 10 years, ideally, if they continue to grow the business, but I can definitely see this stock providing a dividend in the near future. That's just the way I see it. Assets, total assets of 383 billion, up from 275 billion in 2020. So this is clearly, the assets are going well. They are climbing up the ranks, but the liabilities are also going up as well, from 56 billion in 2020 up to 77 billion. So not much, but look at the difference. It's like a 75% difference between the assets and total liabilities. So everything is looking positive so far for this company, outside the net profit going down. Free cash flow, 21.7 billion. Pretty good. They could do a little bit more. What should they do with this? Is there some companies they can buy out? This is a possibility. I think this is somewhere where Google may look to buy someone if they can get it up a little bit more. It's up from what, 13 billion in 2021, so they're doing very well in terms of that, to increase that. And the other option for them is to get rid of their long-term debt, because they have been bringing it down from 14 billion in 2021 down to 11.86 and currently, so they are doing the right things by the shareholders there as well. They're getting their long-term debt down. Is it something you should just pay it all off? It's a possibility with the high interest rates. Wouldn't be a bad way to go. We should do some share buybacks. We'll see how this company goes with all that. Shares outstanding. Yeah, this is a interesting one for me. 12.6 billion. This has been a company that's done absolutely brilliant the last 6 years. They continue to give you back more of the shares in the company. Very positive, very good. This stock, with most of these metrics, looks like an absolute buy all day. Not financial advice. Do your own research before you invest in any stock. Absolutely buy at your own risk. But let's have a look at Alphabet. Where can it grow from here? Well, all the metrics are very good with Alphabet. To me, I think it's in the acquisition space. I see a few companies out there they might want to take over. There's Palantir in that space. They're going to need a bit more money than what they got currently. But this is something, a lot of people keep saying that Palantir won't be brought out by the other shares. Anyway, at the end of the day, it's up to the owners if they want to get out. And we've seen with Palantir, a lot of the owners do, when they get shares, they sell them very quickly. So that's been very common for Palantir, and it's really had a retail sort of view with that company. But getting back to Google, I think Google, to me, continue to buy back shares is very good. Pay down the long-term debt and just continue to grow. If they can keep growing the business, that's very positive for Alphabet overall as a company. But let's have a look at the possible intrinsic value. We're going to do the Graham's calculator, which you can find on TradeBrains for free. And it's just basically a simple calculator that does the share price, earnings per share. You can put any earnings per share you like. Same with the growth rate, current bond yield. We get yourself an intrinsic value. So if we look at Google here at the moment at $137 a share, 5.6 earnings per share, and a growth rate of 5%, you get an intrinsic value of 108. So if they're only going to grow 5% for the rest of the time, you're being overpaying at the moment at 137. But if we go that expected growth rate up to 10%, then you're looking at 166. Yeah, you're looking at a good 25% difference there. So that's where you start 20 to 25. So you're starting to see, yes, the stock could get interesting. And if they somehow just blow it out of the park and double the earnings per share, then you're looking at over $300 a share in this company, and they're getting a steal deal right now. Where do I see it though? Where do I see this company going? Well, I expect their earnings per share to go up. I expect the growth rate to be 10%, being conservative. This is a sort of future. I'm not saying it's right now where the intrinsic value is, but I'd say easily the intrinsic value of this company is double up from here. I could see it easily getting to 270, 280. In the long term, could even end up in the short term. You never know if they bust out some good quarters. You never know, but over the future years, it's clearly an easily doubled up stock from here if you're willing to wait long enough. But if you're wanting to invest now, I actually think it's undervalued currently too. I'd say $150 roughly would be my intrinsic value currently. So if it dropped to $100 again, you can start looking at loading the boat, because I loaded the boat a bit early, so it wasn't that. Sometimes you can get into early. I think, but the thing is, you never get into early if you're looking long term. So if Google's a company you like and you do all the research and you decide to buy it, then holding for the long term is not a bad thing at all. Unless the fundamentals change and they absolutely go downhill and absolutely go crazy down, like Tattoo Chef, or at the moment Foot Locker is a good example at the moment. Unless they turn it around, honest companies, a few companies out there that you can look at that are really going bad big times, and bankruptcy could be on the way if they don't turn it around. But in terms of Google, I think this is a pretty good safe investment for you. You've got no problems with this one going to zero. It's got no short interest as well, 0.45. So this company to me looks like a decent opportunity here, but do your own research before you invest in any company. Invest at your own risk. But thank you very much for joining me here at Barry Charles. I hope you got a little bit of insight into Google, their stock, where their financials are, and if the stock is possibly something to look at. Do some more research, and you may find this is a stock for you. But thank you so much for joining me. Remember to like and subscribe to the channel, and share your videos with all your friends, and leave a comment, and I'll be sure to reply. Have a great day out there.